The next presentation is on investing patterns and framework, Inflexion to Scale, presented by Mr. Varun Goenka, Managing Partner and Fund Manager AIF, ValueQuest. By informing different investing patterns and framework, investors can develop a more strategic and informed approach to investing and make better decisions with their capital. So we will get to learn the practical insights of how these patterns can be applied in real-world scenarios and also discuss the importance of discipline, patience, and long-term perspective in successful investing. I would now like to welcome Mr. Varun Goenka, Managing Partner and Fund Manager ValueQuest, a highly experienced capital market professional with over 20 years of experience in fund management research. Currently, he serves as the Managing Partner and investment fund. He is also the Fund Manager for the ValueQuest AIF S.C.A.L.E Mutual Fund. Thank you so much for being here, sir. Welcome to the presentation. Thank you.
A lot of positive energy. Thanks to Dimple. Let me add to fuel to fire. Partially, this energy is because we are in a great country. What's happening is really remarkable. So let me share my sentiment through a 2-minute video that we recently did at our convention. Can we have the AV there that will truly share the sentiment of how we see what's happening in India? Can we switch to the presentation? So this is something that we share, truly believe within our team. I say to my family every week that this generation that is sitting here, we are truly the luckiest generation, The quantification of that is in GDP, so to say, it took 60 years to reach $1 trillion. And in our lifetime, we're going to experience from $2,500 odd to $5,000 or $10,000 GDP per capita, nobody in this room, however wise, has any idea what that power of compounding would mean to our wealth and the kind of boom that we are going to see. Anyways, it's not, am I audible? Right, so, I mean, half the battle is won because we're in a great country, great time, and financialization happening, so that's why we're sitting here with AAFM. But that's not enough, really, to capture the opportunity that all of us have. समय सबके पास रहता है, और a lot of people get the opportunity, but not everybody really does full justice to harness that opportunity. So the name of the game is, there is an inflection point that we are sitting at, but can we really build scale, achieve scale? Evolution has already given us some answer. It is always said that change is the only constant, but that's easier said than done. So when we saw this transformation in nature, or what's happening in the country, what's happening to our careers, what happens to a family when one person gets success, and the way, kabhi, one person from a village goes to IIT, and the way the whole village takes shape. So did it really occur to us, why does nature really transform a caterpillar to a butterfly? I mean, a butterfly and a caterpillar are two completely distinct beings. This is because there is no way for a caterpillar in its biological form to really reproduce, to really recreate. So nature has a way, has figured out there is a transformation needed for the caterpillar to really live its fullest potential. And mind you, a butterfly is not an improved caterpillar. Similarly, the car was not an improved horse. They're completely two distinct beings. So our every 10-year change, either in form of the company that we are, the individuals that we are, our careers, our families, should be not only just an incremental, but more transformative, better versions every 10, 15 years. Otherwise, we'll be stuck in a very incremental thinking. So all transformations are change, but change is necessarily not transformation. What is the difference? Change is more outside in, transformation is more inside out. Change is more small and incremental. Transformation is more large and complex. Change is more measurable and situational. Transformation is more outcome of multiple connecting dots. That's what's happening in India. A lot of things are coming together for that boom to happen. Change is more shorter duration. Transformation is more deeper and longer impact. So that is why it's important to recognize patterns. That is why it's important to recognize, so to say, sharpen our axe before actually getting down to chopping the tree. In nature, actually, there are a lot of patterns. For example, the golden ratio, as it's called, is across the snail, the sunflower, the cosmos, the trees, the leaves, our lungs, the digital fingerprint. Everything has a pattern. Similarly, capitalism, which is wealth creation, also has a pattern which can be observed, and that is what we are going to discuss very briefly. So there are 4 patterns, or so-called unsaid laws of scale. Ultimately, what is scale is synonym to wealth, wealthy. Rich is not wealthy, right? A lot of us can make money, a few of us will get rich, even fewer will get wealthy. There is a significant difference between all the 3. Pattern 1, the need for speed. If you cannot blitz scale, if the company cannot blitz scale, if a family cannot blitz scale in terms of education, their travel experiences, their memories, there is room for, there are enough mediocrity in this world. So it's very important to blitz scale. Blitzscaling is now kind of all around us. We're seeing in terms of the digital public infrastructure on the right, which is Aadhaar and the whole digitization that India has seen in the recent past. We have already seen the experience in the West where we had the whole SaaS economy, the shared economy that rose and changed the world forever. So today the adoption rates, which is called learning rate, have accelerated really, really fast. There is no room for fast. Either it's exponential change or it's hyperscale or we just get left behind. So similarly in companies and industries, a similar flywheel has to be identified for wealth creation. For example, on the left, the consumer retail or QSR companies, they need to have the 4 building blocks for that flywheel to really work and create scale. Selection advantage, service advantage, inventory quality advantage, and experience advantage. Any consumer company with these 4 building blocks and the subsets will be able to achieve scale. Similarly, if you come to platform companies, again, inventory management, logistics management, the brand, and the financing ecosystem comes together to create entry barriers. Okay, let me, I didn't know which side to turn. Right, so this whole ecosystem has to be coming together for achieving disproportionate scale. We'll see some actual case studies. So we already know what's these invincible guys, GAFA, which is Google, Apple, Facebook, Amazon. It's expanded to Fang Mang, including Microsoft and all. Why are these companies really invincible? Why are these companies entrenched into our life? Because they created these flywheels, and what they are today is an outcome of that. So by solving a customer problem and having control of the digital infrastructure vertically and horizontally, these companies have truly penetrated our life, and they have the pricing power that results in larger cash flows for them, which results in better talent attraction, and the whole flywheel just keeps moving. And what you see, $1 trillion market caps, is a result of that. Pattern 2, find asymmetry. If anybody tells you that there is linearity in the world or equanimity in the world, you know, I'm sorry, that's missold. I'll show you some evidence. So academia teaches us normal distribution. The entire academia teaches us the bell curve, which is normal distribution. Yeah? The reality is a Pareto law, which is called power laws, which is scaling laws. Only a few will make and break the glass barrier to building scale. The reason why academia has failed to understand this is because it is built on assumptions of, if you see the bowl, that's the real economy, versus what academia teaches us is demand and supply, the X and Y curve. Academic teaches us that we have to assume optimal behavior, we have to assume static, versus reality is very, very different. It's more spontaneous, it's more innovation driven, it's more complex growth. So if somebody has to create scale from here, let's say 100 crore or 1,000 crore AUM, has to think very differently than to create a 1 crore or a 10 crore wealth management AUM. The evidence of that is actually in the capital market ecosystem also. Only 1% of the companies have really created disproportionate wealth. Out of 60,000 odd companies, only 800 companies have created absolute wealth creation. Most companies destroy value or remain mediocre, remain subscale. It's very hard for fund managers to identify which will be the next, so to say, any large company that you can think of when it's at its early stage. Right, so this is again evidence from India that
there are close to 1,000 odd companies. Is there a pointer here? Sorry. Okay, never mind. So India has close to 1,000 odd companies. Only 50 companies have been able to reach 2,000 crores profit barrier with 15% return on capital. That's how hard it is to build scale. There is quantitative evidence of how many companies reach 100 crore profit barrier, 500 crore, 2,000 crore, and 5,000 crores. As fund managers, we seek companies which are at 100 crore profit barrier and can reach 500 crore and 1,000 crore. Pattern 3, adapt, transform, or die or lag, and there are a lot of walking deads in terms of industries and companies. Market cycles are becoming not only steeper, but also shorter. So for example, the first wave of mechanization almost took 100, 150 years to happen. The first tools related to steam engine, etc. But today, the entire industry life cycle is getting shortened to 7 to 10 years. We see blitzscaling, we see creative destruction, so to say, and that happens at a pace if we don't update ourselves either in terms of information. If industries don't keep pace with innovation, there is no way to not lag behind. So, example of the previous slide is on the left. Earlier, automobile industry used to be a mechanical industry, and today it's actually a system integrator. So there is a clear change in business model from being a mechanical parts-driven factory model to being an assembler. And that's what created wealth on the automobile industry in the initial years. On the right is the transformation from, let's say, a server-led business to the AWS economy today. So we are moving to a shared economy where we do not need to have physical infrastructure in a lot of areas. We could hire them, lease them, rent them, share them, which frees up a lot of capital to invest in growth of your core business. This is a very simple example that indices, let's say a BSC 500 or a Nifty or anything, also every year shuffles a few companies in and out to adapt, and that's why it's getting hard for a lot of fund managers across the world to beat the index. Index adapts and the fund managers lag behind in some cases because they're not able to keep up with the complexity of the market. This is a fantastic example of the video that I showed on India. If we see India here, 9 to 166. So what is this number? This is number of companies more than $1 billion sales. In 2003, India had only 9 companies. In 2022, it had 166 companies. So if you see the Western world, which is US, Canada or UK, there has not been such a stark change. But the kind of delta that China and India have seen is so we need to go where the buck is. And that's the East world, the emerging world. One inevitable transformation has been from assets to intangibles, from tangibles to intangibles. So today, the whole world is about customers, talent, ecosystem, the ESG, social environmental impact, and software. It's not about physical assets as much. Pattern 4, the last one, is growth. Seek rate of change and change of rate. And let me explain this. This is why India is the exciting place. This is why wealth management or financial management is exciting, because the pond is very large. There is enough room for all of us to get enough clients, their AUM, there is enough room for many companies. So let me explain this. Rate of change is the fish which is increasing in size, which is basically an individual or a company set for high growth. And change of rate is the pond. Agar pond chota rahega, no matter what you do, there is no way you can achieve really large scale or success. And that is why being in the right country helps a lot. Right, so this pattern of rate of change and change of rate has been visible across the world in every industry. On the right, we saw the railways, the telegraph, the telephone ecosystem going through the S curve, and on the left there is consumer products and all that. We have to identify our S curve, and if we are doing all the right moves, automatically high tide takes you up. So finally, just to summarize the entire framework, for lack of a better word, if we call it swag, S is for speed, W is for winner take all, because the world is asymmetric, A is adapt, and G is find the right growth pond. And these are the 4 building blocks which determine the terminal value of both an individual or an industry or a company. And that is what actually determines the man and the boy. A simple case and example was, for example, a Jubilant Foods. No recommendation on a company, but this is just a case and example. What happened was the industry was coming out in early 2000. We had begun eating out, right? And then we had the Zomatos and Swiggies and all coming in mid 2000. Combined with that, the company had the brand, the supply chain, and it blitz scaled. So everything, all the connecting dots came in place. Incidentally, some of the food companies have created bigger wealth than some of the most complex technology companies. Okay, lack of a better time. How do we connect the industry framework to the company framework? So we follow 2 simple philosophies. Find scalable companies with sustainable competitive advantage, adaptive on a long runway with superior execution capabilities, and that framework basically helps us identify the key inflection points on the industry and company. The detailed framework is here, where all of us work hard on trying to identify that. We have to work on a lot of second level complex areas to find that. Our focus is 8 to 10 years framework. I would not go into the team and the data. That's about it from my side. Today we are a 12-year-old fund management team. I would be happy to answer any questions on that.
Thank you so much, Varun sir, for such a wonderful presentation. A very unique concept. Thank you so much, sir. So now a question for the participants. So it's a finance game like a business we used to see when we were in our childhood. It's a finance of life game that AFM has created.
Thanks.
Sir, you have to ask question also.
Shruti Bhosle.
Shruti, Miss Shruti here?
Okay, we have it.
A new trend now, third one. And you have to change the trend, you have to pick up a different gift now. Sir, a quick small question you will be asking. You go in the center, please. Yeah. And participants can also ask questions, as I mentioned. If you have anything to ask to the speaker, you're most welcome. Yeah.
Does the question have to be around the presentation? That's very boring. Can I ask?
Around the presentation, any general thing that you have told many things actually.
Okay, I just want, it doesn't matter what's your calling in life, where do you feel that, okay, this is where your heart is, that's the work that you want to pursue?
Well, I just recently graduated and I'm working in the banking sector. It's been 6 months old where I'm working. I've also been an achiever in national awards and international award. I have won National Bharati Award for my social service, and also I'm a director of one of the NGOs. And that is where I realized that no matter where you reach in your life, maybe earning crores, thousands of crores in your life, yes, you will have that. But then, at the end of the day, if you aren't making a difference for a person, or maybe for somebody's life, I guess that plays a huge impact. And if you're just existing, earning money, maybe no. But whereas if you're making a difference, maybe a little difference, and if somebody is very grateful, like maybe say, if somebody is very grateful and saying, thanks for existing, I guess that is one big impact, and that is where my heart lies. So maybe no matter where I would reach up, maybe in a very small company or very great company, if I'm able to make a single difference in one's life, I guess that's enough for me, and I'll be satisfied for the rest of my life. So yeah.
Great, Shruti. Big round of applause. And that's what we are here to make a difference in your life. Even I'm also very happy and blessed to be with this academy, because we are also making a difference in your life by upskilling you. So a gift? A different, please.
Books.
Oh, she's got the book. So again, something about this book, I would like you to please show it to people, Shruti. Sir will give it to you, and yeah. Can you just read the title of this book? This book is created in-house. It's not available for sale as of now. This is also what we have created at AAFM with the experience and legacy of AAFM.
Yeah. AAFM, Practical Guide to Estate Planning, Wills and Estate Planning for Professional Advisors.
A big round of applause, please. Thank you, thank you.